Hi traders, it's Roberto and welcome to the mentoring program tutorial. This is first part of a series, probably around 5, 6 tutorials. Each webinar will be less than 5 minutes, and let's get started. On your screen you'll see the what we're going to be focusing on in the next 5 tutorials: price action, trading sessions, Fibonacci, double stochastics indicator, and news events. Now, the most important thing, and what we're going to be going over and over again, is the trading sessions. We have 3 a.m. London, a window of opportunity is between 2 and 4 a.m. This is all Eastern. 8 a.m. New York Open, noon end of the London session. There's the 5 p.m. end of the New York session, which is called the 5 p.m. Clock rush. 7 p.m. Tokyo, and 7 and 9 p.m. Singapore session. Just to give you an idea where the money is in Forex, and what I'm talking about is when we have a change in sessions from, let's say, from New York to the Asian session, there's oftentimes a change in trader sentiment, and usually you get a change in price direction. So there's the best time to trade the markets is between sessions. So if we concentrate on those areas, those times, you can grab a minimum of 20 pips or more on a regular basis. Okay, so we're going to go through a lot of examples to reinforce the idea that there's money to be made in each opening and close of each section. Homework. This is so important. You're going to be required to take at least 100 screenshots a week. Spend 15 minutes a day identifying retracement reversal patterns. This will help you. If the more you look at more patterns, the easier it is to build confidence, and you see the patterns over and over again. At what would normally take years of a trader to succeed by just repeatedly finding trade setups, you can do in a very short period of time just by going back in history and looking at past behavior, looking at the patterns. We're going to go through all the price action candlestick patterns. We're going to be using Fibonacci. We're going to be using the double stochastics indicator. And last, we're going to focus one whole session on news events, how I come about finding the deviation for the numbers that we need to be able to enter a trade on a news event. Oftentimes, the news events are not, there's no trade simply because the numbers aren't there. You need an extreme positive or negative number for a trade, and usually trades and news events last for about 2 hours, maybe not even more, unless the trade is in the news event is in the direction of the overall direction, the directional bias of the trade. Then yes, then we may stay in a lot longer. Maybe it will set the tone for the month, like GDP news or non-farm payroll. Okay, so this is the syllabus. This is what we're going to be looking at. We're going to be focused on trading sessions. We're going to be focusing on these 5 things on the left-hand side, and then the homework is really important for your success. Remember, this is a mentoring program. It's a year-long program, so even after the month-long session is over, we're going to be continuing to communicate. We'll go back and forth with screenshots and just a dialogue until you feel comfortable, until you own the knowledge, until you understand that there are just certain trade setups that are valuable and others are good to stay away from. And it's mostly about when not to get into the market as opposed to when to take a trade, because when to take the trade will become quite obvious. It's just those period of times and when to stay away from the market, once you just shut down your computer and just walk away and come back when the markets are ideal. Okay, so let's get started. We are looking at the pound yen. I like trading the pound yen, the euro yen, because when they do move, the pips are substantial and they're quite predictable. Give you an example. We're looking at a stochastics indicator, double stochastics, a 2133 and a 1433. And we're going to use them as confirmation, not as signals. confirmation to see what we see in price action. The perforated lines are 24-hour sessions. So we will figure out, okay, what is the market doing during this 24-hour session, and how can we trade it based on price action, stochastics indicator, possibly previous support resistance, and a Fibonacci indicator. Now, this particular trade was easy because it was the turnaround Tuesday. This was Monday. There. This is Monday coming into Tuesday. What I like to do is that if I was not able to take this trade selling on Monday, then I would wait for the market to completely exhaust itself. And this was about, this period right here is around noon. And this is when I'm going to be looking for a trade, a counter trend trade on a Tuesday, coming into Tuesday. The yen crosses are probably one of the most, actually the best, most consistent pairs to trade the turnaround Tuesday. So here's Monday's run, and the pound yen's daily average is anywhere from 125 to 300, and it went down about 291. So this is clearly qualifies for a counter trend trade. And what I do is I wait till about noon, and I notice that I would have loved to enter a trade down here instead of waiting for this 1 hour candle to finish. But let's say I wasn't at the computer, and then this candle did print. At least I have a color change candle. Stochastics indicator is oversold on the 21 and 14. Very important. You want both stochastics indicators to be oversold or overbought if you're going to be selling. Here was the trade, and even if you got in late, that was 103 pips that the market moved up. If you would have stayed in longer, that was about even more, 130 pips. But this is the turnaround Tuesday trade. Now, retracements happen every day with all the yen crosses, but they really are consistent on Tuesday. That's why it's called turnaround Tuesday. Okay, so you have one trade set up in your arsenal. That's very important that you can repeat this on a weekly basis. It's that Monday to Tuesday retracement, and I focus mainly on the yen pairs, okay, which would be, let me just put them here for you, GBP, JPY, Euro JPY, Audi JPY, Swiss JPY, and Canadian JPY, okay? So these are the trades, these are the pairs that I normally focus on. I also look at New Zealand yen, but these are the core trading pairs for the turnaround Tuesday. Okay. They are also used for other trades strategies like Forex Friday. We'll go over that. But remember, this is Monday, this is a sell-off on Monday, this is noon Eastern time, which is around 5 o'clock London. The London session is closed, so this is the retracement. We use the stochastics indicator on the 1 hour chart to tell us that the market is oversold, and we enter a trade. Here is a trade on the Swiss pound, the same thing. This is Monday's trade, identical to the pound yen, 277 pips. Stochastics notice is oversold on the 21 and 14. We enter a trade at noon. Market went up over 124 pips. Let's look at a few more pairs. Here again, this is the Euro yen. This is Monday. Market sold off, exceeded its daily range, which is only usually about 150 pips. And this pair put in 384 pips on this particular Monday. You enter a trade on the London close, which is noon Eastern, and went up about 170 pips. Okay, let's just look at a few more pairs, and this is very important that you review this on a daily and weekly basis. When you see a trade set up like a Monday to Tuesday retracement, it's so important that you go back and just review that on several pairs. So next week, next Monday, when we do see a move, significant move on Monday, then you can anticipate a move going in the opposite direction, and you'll know what to do with confidence. Okay, so this is what I'm going to be training, this is what you need to be doing. When you look at these videos, this is essentially what I do. I just go back in history and just find, where are those trades? What are the patterns? What are the candlesticks telling me? And why is there such a move, huge move, after a certain candlestick pattern formation? And also, at what time? Is it the Asian session? Is it the London session? Is it the New York session? What happens from session to session? These are all the questions you need to ask yourself each time you trade. And if you don't, you can open yourself up for some huge mistakes if you don't have a checklist. Just like a pilot before he takes off has a checklist, and it's a long checklist. I had the opportunity of sitting as a co-pilot one time for this, a pilot who runs private jets. He flies for a private company, and I could not believe the checklist he had before he took off. And it's essentially the same thing what we're doing. We need a checklist on each trade that we take. So let's look at some more pairs. Here is New Zealand yen. Again, it mirrored all the yen pairs, essentially look the same. 132 pips, which is a lot for the New Zealand yen. And here's stochastics indicators oversold on the 21 and 14. We have a color change candle, and the market completely turned around on Tuesday and gave us 100 pips and exceeded actually it went even higher than Mondays. Usually we only have a retracement on Tuesday. This one completely turned around and made up all the losses from Monday. So that's it on Turnaround Tuesday trade setups. The next tutorial, we're going to focus on price action, actually identifying trades using candlestick patterns, previous resistance or support, and we're going to throw in Fibonacci and pivot points. I added that, and also we're going to use the stochastics indicator.